Yeah, Mr. President, I gotta head out, big dog. Stream's about to start. Just move this bitch. Let's go. What's up, guys? How we doing? Come on in, man. How are we? 254 out. ATR sitting 33. Not too bad, man. We got a little bit of volatility left here. ATR in the 30s. It has not been in the 30s this time of day for a minute. So let's see. Let's see what we got. Looks to me like we might be forming a little sideways trade range here. All right, so, you know, I'm looking at bar 31 through 35. Yeah, you can see pretty much the whole day. And I'm looking at this and I'm thinking 50% retracement hesitation? To me, that's the simplest explanation. You obviously also had, see the low of bar 9, the high of bar 13, then the low of 21, and now the high of 33. There's obviously a little bit of thought out of the bulls and the bears, therefore, that, you know, maybe we end up fading and seeing a big kind of bear channel. It would be very wide. That to me is a little bit less of an argument, but worth noting. So we've got the Apex accounts loaded up. We've got the Take Profits loaded up. By the way, man, Take Profit. I hope they're not watching this. But I gotta tell you guys something. Take Profit, the deal right now is half off, no activation fee, and you can pass in 3 days with code BIG, B-I-G. And when I saw them change that rule from 5-day pass to 3-day pass, I'm like, it's over. It's over. We're bankrupting the company. You understand? Like, 3 days to pass, I think that that's an insane change. Obviously, they know their numbers over at Take Profit. But I'm looking at that and I'm like, oh, dude, it's done. It's done. 3 days to... The biggest downfall of Take Profit has always been the 5-day pass. Now that you can pass in 3 days, I'm like, dude, I'm not gonna say anything. We're just gonna trade those accounts and take them for everything that they've got. We love it. All right, bar 36. ATR sitting at 30. Manuel, how we doing, my man? Mark, big dog. Funny, Cheryl, JJ, what's up? How we doing, guys? Big news, my man. Gamma, how we doing? Kenji says, are you saying the new 3-day pass over at Take Profit could be their downfall? No, I'm messing around, dude. I'm saying it's the best thing for us. Because when I look at that, I'm like, oh, dude. Like, that is so good for me. That's ridiculous. Now, granted, of course, these companies, you guys, I don't think you guys understand. They know their numbers. Like, this isn't their first day doing this, okay? So when they make a change, they're making an educated change, okay? But sometimes one of these prop firms makes a change and I look at it and I'm like, yeah, okay. I don't know. That's kind of neutral for me. And sometimes I look at it and I'm like, did I read that right? because that's very good news for me. That's how I feel about this Take Profit Trader 5 day to pass change down to 3 days. You see this, guys? This is ridiculous. Big little sideways range. It really makes you wonder. Now, again, I would never draw that and be like, yeah, I'm going to trade that big bear channel. But if we end up seeing, you know, really a crack downside, we take out the low at 29, I'm definitely going to start thinking that way a lot more. In the meantime, though, yeah, little range bet. Little bet on the range. There's a scout, by the way. That's it. ATR sitting 32.33. I certainly don't mind that. Using the wick low of 29 here to manage my risk. See if the bulls can fade this guy right back up into that single bar sideways trading range. So what's going on with you guys here so far today? I know some of you guys probably traded. I'd say probably a lot of you have already taken at least 3 or 4 trades today, am I right? At least. I don't want to say volatility's back to normal because we're certainly closer to average now, though, aren't we? You know, at 31. This time of day especially, that's not too bad. Canada says crushed it so far. Cheryl Small Green, 3 trades. Good. Ray, 1 trade. Big Javaz, 10 trades so far to be exact. Yeah, by the way, if your trade number is high, that doesn't... A lot of guys will tell you, man, if your trade number is over 3 trades a day, you're over trading. That's total fucking bullshit. They don't know what they're talking about. That's not how statistics and mathematics work. What a ridiculous statement to say. Context matters. And if you took 100 trades in a single day, I mean, look at a high-frequency trading firm. They're taking, Lord knows how many, a ridiculous amount of trades. And would you say that a high-frequency trading algorithm is over trading? That would be very dumb and short-sighted and silly and amateur to say that. So it's not about the number of trades. It's about when you look back on the trades you did take, did you have reasonable expected value on the vast majority of them? So if you took, you know, let's just be dramatic. If you took 57 trades in one day and you look back and you're like, yeah, about 47 of those trades were really bad ideas. Okay, that's not great. If you look back and you're like, okay, out of 57, I'd say 50 plus were damn good trades that I have good expected value on, at least reasonable expected value on, because a lot of those would be scalps, then I think you did a good job. right, bulls. Back up into the range. Big tube, my man. Hello, Nico. I had my best trading day in a month. 14 trades. Good. Good. And as that sample size gets up, you have more and more reason to believe that you traded well. Now, my one warning, I don't want to be so serious. We can save that for the tomb. But my one warning here is if you have a large sample size, but it's not like ridiculously large. So like a single day where you took quite a few trades. So let's say like you took 14. Just use this as an example. My one warning for you would be sometimes in that range of sample size, the hidden danger can not yet reveal itself if you're doing one very specific thing, which is trading very, very negative reward to risk, very high probability stuff. So if you're, risking like 100 to make 10, you know what I'm saying? Or risking 80 to make 8. It doesn't have to be 1 to 10, it's just easy numbers. You're gonna win most of those trades. So even with a sample size of like 15 or 20 trades, you could be up. But if you extend that sample size to 1,000, if you don't have edge on the trades, it could flip negative. Right, now that's not to say you can't make money with very negative reward to risk, high probability. The question is not reward to risk or probability separately. The question is, if you take a large sample size and you take both of those and throw them together, does it equal a predictable profit or not? So that would be my fair warning. Edge, my man! So you watched Owning Mahoney, huh? Yeah, my wife and I, one of our favorite movies of all time. It's a great movie. It's not very well known. And yeah, by the way, if you're a trader, that's not just a random statement. If you're a trader, it's a very good watch. Because your business here as a trader is to operate in a similar way to the way that a casino owner operates. So when you watch that movie, it's even more tragic because you pick up on little things a little bit harder because you're like, oh, I understand the stats here and I understand the math of what's going on. So when the owner of the casino in Atlantic City says, you want to know how we're doing, talk to me at 2 a.m. or 3 a.m. or whatever he says, it just hits a little harder because you're like, yeah, fuck, really wish you would walk away, Question, how do you handle large drawdown? Well, that's, I think, a deeper question than you might think it is. If you have large drawdown because you're not a profitable trader, then the way that you handle it is you develop an edge. If you are a profitable trader, meaning you have positive expected value, the way that you handle drawdown is ensure that your sizing is appropriate for the trades that you're taking, and then you just continue making logical, consistent, good decisions. Handling drawdown really isn't complicated. If the math is what you need it to be, then it's very straightforward, actually. You just keep doing your job. But, you know, there's no hand-wavy secret to managing drawdown if you're just a losing trader, you know what I mean? Because the math, no matter how many times you spin around in the mirror, the math doesn't magically get fixed unless you're actually trading with positive expected value on the averages. Boom. Half ATR. Keep it pushing. Good little scalp. All right, sitting right in the middle here of this sideways range. Question, why buy here? We're in a 5-minute order block. Man, let me answer your question with a question. Why is a 5-minute order block? Why does that create a scenario where the only logical thing to do is to hit the bid? You know? It doesn't. If it did, the market would implode and poof, cease to exist. For the market to work, there has to be two sides. So when people say, you know, I'm trying to shift your logic here, all you guys, everybody. A lot of times, beginner traders come in and they say, you know, wow, what a ridiculous short. This is obviously a buy. And it's like, if it's obviously a buy, then why are institutions driving it lower? If it's so obviously a buy. The market is two-sided, you guys. It is never so obviously anything. We live in a fog as traders. Our job is to identify situations that you can repeat consistently to maintain a positive expected value across a large sample size of trades so that you're able to extract predictable profit and then live off of that money. And then some, ideally. That is our job. If it was so obviously anything ever, that would be the last second that the market trades because it would implode. Because the balance would be off. You'd no longer have a bid and an offer. You would only have one side. Question, do you trade evals different than funded accounts? Yes, I do. I'm very aggressive with evals. But I've also, you know, I mean, straight up, I've earned the right to do so. Okay, so when you have a track record of being a profitable prop firm trader, which this is a business, so you're operating your prop firm trading business. I want you to think of it that way. You have expenses, you have revenue. Revenue are, of course, payouts. Expenses, of course, are test and eval and activation fees, okay? And you should run it like a business. You should know those numbers. Now, for the evals, for me, I trade them aggressively because I know that by a large margin, my number one concern when I'm trading an eval is not the cheap cost of the eval, because they do not cost much money. It's the opportunity cost. It's the time. It's like, it costs me more money to spend a lot of time on this eval than it does to pay for the eval. Now, does that mean I just gamble them to get through? No, but I scalp them aggressively. Okay, so the minimum grade that I would take goes down, and the size that I take goes up. And then when I get 2/3 to 3/4 of the way to the finish line, the pass point, I size down my contract size, usually from minis down to micros, just to create a higher probability scenario that I get over the finish line. Does that make sense? Because I've now invested more time into the eval, I want, in exchange for that time I've given the eval, a higher probability of passing once I get 2/3, 3/4 of the way to the finish line. Troy says, I really need to treat it like a business. That would change the mindset. I'm still building my consistency. Yeah, all you guys, seriously, I'm dead serious. Treat your prop trading like a business. That's what it is, dude. If you haven't realized that yet, you're operating a business right now. It's called your prop trading firm, okay? Or your prop trading business, to avoid confusion with actual prop firms. You should have a spreadsheet where you track your expenses, again, evals, tests, activations, and your revenue, payouts. You should know your expenses and revenue each month, and you should know your profit each month. Which, by the way, if you're trying to quit your job and go full-time, you're going to have to know those numbers. It's too easy to not do this, by the way. It is so easy. And by the way, a lot of businesses that have much more complex spreadsheets than we need here make a lot less money than you can make here. So I'm not making a big ask of you. I mean, whatever, it's your business. Do whatever the fuck you want. But this isn't a big ask, man. Like, you can make a lot more money here than you can in a lot of businesses, and they have to keep a lot more detailed records that take a lot longer to do than we have to do here, because it's pretty straightforward. So I think it's worth doing. tight risk. Little scalp here on the trading range. If we end up taking out the wick high of 33, by the way, and holding it, my thought becomes, you know, hey, are we going to develop into a soft bull channel? We'll see. All right, let's see what happens here. Nice bar 40, man. Minute 25. ATR sitting 34. I imagine this is probably going to fail at least for a second before we just break out into a giant bull trend. Now, of course, hang on. There's a couple of contexts here that you can look at. This is really early to look at it this way, but that's what I'm starting to wonder about. Really, the look here has been and is this until proven otherwise. So we'll see what 41 here brings. 41 is going to open up in about 50 seconds. All right, let's see if 40 can close above the wick high of 33. Oh, barely. Okay, just barely. So 41 now becomes a really important bar for me. Watching 41. Now, by the way, since we're testing the high end of this range, here, I'll draw it again for you. First of all, 40 now as it closes is a little bit of an outsized bar. So I'm not saying this would be necessarily a logical thing for me to do regardless, but to prove a point, if you wanted to bet on this range now, I wouldn't necessarily argue with the logic. What I would argue with is, when you're testing the actual outskirts, you no longer have much to manage your risk. Okay, so if you're like, Nico, you have to, short this right now, I'd say, well, do I have to do it right this second, or can I wait a few minutes? And if you say right this second, I'd say, all right, I guess I have to risk the wick high 13. Okay, and if you say, well, you can wait this entire bar, I'd say, all right, let me wait this bar, and if we pull back in, I would short it and then risk the wick high of 40. Which is what I'd prefer to do, but it's so damn close, the probability is very low of success on the trade, meaning, right? Because then you're making a ridiculous reward to risk ask, which, naturally in all situations does lower the probability to a degree. But all that being said, let's see if 41's got it in him to actually get us outside this range. I doubt it. All right, who's bullish right now? Who's bearish? In the chat, who's bullish? Who's bearish? Let's get a feel for this. Minute 20 out, we'll have 41 rolling over here into 42. All right, let's see. Okay, bearish, bullish, bullish, bearish, bearish. Bull, 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 bull. Bear, bear. Bull, bull, bear, bear. I think bull wins by a small margin here. All right, you want to do a vote so we can actually get a count? All right, vote in the poll. Let's get a real count here. No fill. That's okay. Keep an eye here on 42 as it takes out the wick low of 41. The issue here is context is quickly turning into potentially this. My only thought is, you know, we very well could turn this into a wedge. See what I mean? So, then also, of course, you still have this big trading range, which is typically my default assumption. But it's not the cleanest sideways range in the world. Question, if you accidentally made 13,000 profit on a 50K lucid daily eval with 50% consistency, would you just try to blow it before end of day? Am I reading that right? 13,000? The goal is 3, correct? Frederick, answer. Answer, what's up? You actually made 13? Yep, 3K. Take profit didn't set. Yeah. Oh man. That's a weird situation. Don't do what I would do. I guess what you could try, or what I would probably try, because the problem is with 50% consistency, now you have to hit another home run just to pass it. See, I'm sort of a crafty motherfucker, so what I would probably try to do personally, again, don't do what I would do, is I would probably try to trade reasonably large size near the max of what the account would let me, and then I would try to lose the bid-ask spread as many times in a row as I could. Lucid might not like that. They might say, what are you doing, dude? You might get an email, which is why, you know, again, don't do what I would do, but that's probably what I would try personally. All right, bar 42. Next time, set your take profit, big dog. All right, take a bet on this range here. I will. And the range that I'm looking at is this. Of course, the counter risk on a trade like this is that the soft bull channel more so fulfills. Yeah, that's a big, yeah. Yeah, well, yeah, anyway, that's what I would probably try to do. Again, they might not like it, because that's going to look a little bit weird. It might trigger some watchdogs on their end, but... There you go, Bears. Suck it right back into the range. There you go, Bears. Keep it pushing. Keep it pushing. There we go. Half ATR scalp out. Cole, what's up? What's up? Cold is late today. Because you know this guy, this Cold, he is just... He spends, Cold, what is it up to now? 3 hours a day injecting ice water into his veins from the tap? It's crazy. Hey man, by the way, all you guys, if you have not done so yet, I appreciate you hitting like here on YouTube. Or dislike, big dog. But I appreciate you doing so. Helps out a whole bunch. We should be able to get directly to 150 likes. Plenty of people here. 44, man. Come on. That is embarrassing with the amount of people we got. Okay, our poll here. If you have not yet voted in the poll, go ahead, vote in the poll in chat. Bullish or bearish on NQ? Currently, we're sitting 64% bullish. So that volatility is coming in just a little bit, coming down. The average range here now of a 5-minute bar is down into the high 20s, sitting at 28 points. Is now the average range of a 5-minute bar here on Nasdaq futures. Got some questions about amount of micros per account. I trade 2 to 5 micros per funded. That's assuming a 50K funded, for example. That to me is the sweet spot. I'll go down to 1 if ATR is like 100 or something crazy, or 90. There's also some situations where I'll go down a little bit if I am in a situation where, like, particularly for Apex, once you get past the first payout and then the second and then the third, you get to a situation where if you're trading like 5 micros per funded 50K, you will sometimes, and oftentimes actually, sort of blow out the max payout in less than the minimum amount of trading days, which is unnecessary risk in my eyes. So I'll also go down in that case a little bit, but 2 to 5 is the sweet spot. I mean, you guys know, a lot of you guys are like, 2 to 5, what, minis? No, micros. I believe in scaling horizontally. It's what's worked the best for me, by far. If you try to scale this vertically, straight up, I think you're a cheap ass, and I think you have unrealistic expectations of the math. Because if you're trading multiple minis, you really think you're not going to lose 2 trades in a row? Come on, man. Go back to running this like a business, like we were talking about not that long ago. You want to make a lot of money? You want to generate a lot of revenue? Every business is going to have some expenses. It's a good thing. It means you're making profit. Okay, we have bar 45 here, trying to take out that wick low bar 44. 4 minutes out here left on this bar. I will say, obviously, it doesn't change the fact that prop is such a stupid opportunity if you're a good trader. Meaning it's such a good opportunity, right? But I will say, these commissions, I feel like they keep creeping them up on us behind the scenes like we won't notice. And I'm looking at it, I'm like, I'm used to personal account commissions, which I actually paid a lump sum and negotiated to get my personal account commissions down very low. Very low. And it's like, it is, I'm paying like triple on these props, what I'm used to. And it still doesn't even matter, because we're still taking them for everything they got. Fucking keep raising them, we love it. We love it. But it would be nice to have them lower just a hair. On your chart, what is the yellow line? Question. That is the 20 EMA. I don't care about it too much, but we have it up because it looks nice. Yeah, commissions. Yeah, by the way, when you guys start... First of all, the answer is both. Should you trade... I get the question a lot, like, should you trade props or personal? Guys, the answer is, if you're profitable, you trade both. Why would you not? But when you move into personal account trading... By the way, I'm watching bar 46 here. Let's see, 4.5 minutes out. When you move into adding a personal account, which I know a lot of you guys already have, call the broker, negotiate. If you're offered a lump sum payment to buy off your commissions, do it. I highly encourage you to do that. It makes all the mathematical sense in the world, and if you plan to trade for a long time, it will be a highly profitable decision to just pay the lump sum. But you should also negotiate. Okay, so as 45 and now 46 pull in, you know, the argument here for a big soft bull channel is starting to weaken. It was never really like so strong to begin with, but now this argument is starting to just become stronger and stronger. This is the same argument we've been making since bar, 38. Big sideways range. We'll see if 46 ends up bouncing back into the range. If the bears can actually curl this and start fading into the afternoon here, that would, of course, open up some opportunities we'd be ready for. Alright guys, I'm gonna get a refill on coffee. Give me 2 minutes! Don't you go anywhere. All right. What's up? Okay, we got 46 into 47, minute 27 out. Question, how does counting the bars play into his strategy? Curious how he uses that as an edge. I don't use it as an edge. It just makes my life easier. So when I do my 5-minute review at the end of the day, that really takes me about 45 seconds. Makes my life so much easier. An added, secondary benefit to this is that when I'm explaining bars to people here, as well as in the tomb, where everyone lives in different time zones, you know how much of a nightmare it is to say the 9:35 bar, and everyone lives in different parts of the world, so that's an added benefit as well. But really, it's for myself, for my end-of-day review. Okay. 12 seconds out, copy trader engaged. Stop limit sell goes out. Watching 47. Place him, roll over, and I will see if the bears want to take it. If they don't, I don't want to participate. If they do, I'll be a part of it. And they will take it. Stop goes right above 47. Now, right there, by the way, that's the first bar closing outside this bigger range, right? So that is what I would call the early trade, but 47 is a small enough bar that I'm cool with it. ATR sitting 27 really right now. Question, where do you see the low in the next couple of days, or do you think this might be a temporary bottom? I don't care about that, just to be candid. I'm a day trader. I trade intraday price action. Nico, how do you like higher commissions on these prop firms? Whatever. I don't appreciate, the firms starting to raise commissions a little bit, but, we can sit around and cry about it, or we can just keep making money. Ideally, I'd make some money on this trade here, man. Obviously, the counter risk to a trade like this is being the early trade on 47. We'll see if the bulls pop us right back into the trading range, which is clearly what they're attempting to do right now. See what they got. There's 48 rolling over here into 49. ATR sitting 26, by the way. Let's see if these bulls got the wick high of 47 in them. Bunch of babies so far. Yeah, there's a reason that the stop goes where it goes. This is ridiculous. There we go, flat. Keep it pushing here. We got bar 49, so this makes you think, are we going to see a low volatility, big sideways range afternoon? Man, I hope not. I hope not. But we got big bar 50 on the way to come save the day. 2 minutes, 10 seconds out. ATR sitting at 27. Okay. Scout bet on the train range. See what this range has. And we got just in time, man, for big bar 50. So this is that range mentality. Now, if the bears end up actually taking us lower, especially if they take out like the wick low, see this 26, 27, all of a sudden I'm looking to stop hunt the wick low at 21 if volatility can increase. Until then, after the early trade on 47 fails, my baseline assessment, I don't have a choice. It has to be range. So let's see what these bulls got. Hopefully volatility can stay above 25 on the average range here of a 5-minute bar. Okay, flat. Okay, I'll sit, I'll watch 50, we'll watch 51. See if these bears got anything. And my shit's coming unplugged. What is going on here? Okay, minute 36 out, watching bar 50. There we go. Okay, 50 is going to close up as what is effectively a doji inside 48, inside 49. So, you know, this is one of those situations. So we got to be real careful here. We've got a single bar, last 5 bars, single bar sideways range now. ATR is still 26. If this holds up much longer, you know, you start getting 42, falling off the end of the average range. You start getting 46, eventually falling off the end of the average range. All of a sudden, ATR is no longer 26. Now it's like 18. So I got to keep an eye out for that, which would not be great, by the way. Ideally, we could get somebody. I mean, even if the bulls take us back higher, we're still dealing with that big sideways range. My ideal situation right now would be if these bears could just crack lower. Give me 1, maybe 2 nice continuation bearish trades. Anything but a single bar sideways range. All right, so the average range of a 5-minute bar dipping below 25 points, meaning volatility, movement, getting a little slower, slowly but surely here. This time of day, these last few trading days, we've actually been even a little slower than we are right now. But that doesn't mean that, you know, this is so tremendously high. It's certainly not. This is still on the lower side volatility-wise. So just watching out for this single bar sideways range, bar 47 onto current, which is 52. Question, are there any scenarios where you'd be taking more than a full ATR of profit, excluding Trump tweet? 100%. A full ATR of profit is not my baseline. It just so happens that that's the case on quite a few of my trades. If it's, let's say, for example, just one of many examples, it's a higher volatility trading environment and it's a small signal bar. Or I'm sorry, it's a larger signal bar, we'll say, for this example. And let's say ATR is 65. And it's a big bull trend and the signal bar is 87. There's plenty of scenarios where, as long as the signal bar is not outsized in comparison to the previous one or two in that sequence, that my target, rather than a full ATR, will be a full R. Again, especially true in trends, but not always the case if the signal bar was a bit outsized compared to the previous one or two. Yeah, there's a lot of ways to do this, guys. The way that works for me is not the only way. Trade however you'd like. The goal is to make money. But if you're not making money, at least over, you know, the course of a moderate to large sample size, then something's wrong. All right, we got 52, bar 52, rolling over here into bar 53. Let's watch what 53's got. Ideally, we'd get away from this little range. meaning let's keep moving downside. Probability-wise, it's not the most probable thing, but it would be the best thing for us. All right, 53, come on now. See these bears grow some claws, take us, what do you guys think? 75 points downside here on bar 53? I think that would be sufficient. Oh, trying to take it right back into the range. All right, give me 2 minutes. I'll be right back. Don't go anywhere. All right, what's up? Okay, we got 53. Closing inside the wick lows of 48 and 50. Watching 54. Very closely. By the way, guys, hey, huge flash sale over at TakeProfitTrader, 50% off, no activation fee, and you can now pass in just 3 days, which is, this is the best deal that they've ever run that I've seen. Because it's always been 5 days to pass, and now it's 3. Code BIG. Code BIG. B-I-G. All right, 4 minutes, big bar 54, watching this one carefully. I would love to get a nice clean close here. I would love it. Throw out a stop limit sell and let the bears eat it up. Chat says it's nearing end of day. Most people have made their money for the day. Don't expect anything grand. If you're talking about retail trader, I mean fair, but if you're talking about retail traders, we don't matter. We don't matter. Institutional volume matters. And if institutions can make money all day long, don't you think they're going to? They have an obligation to the investor. And everything is on the line. All of the business in the world is on the line. A rinky-dinky retail trader who made their money by 10 a.m. doesn't mean anything to the afternoon volatility. All right, 235 left here on bar 54. Oh yeah, for sure less volume, 100%. All right. We got about 60 seconds left here on Big 54. All right, 54, what you got? Hold it. I don't want to see much more growth than that. Not much more growth than that, big dog. Let's see. Low a day is the wick low at 21, by the way. Right over at 29,513 region. Bar is getting sizable here, so I'm going to consider that. I don't want too much more growth. ATR 24, size of the bar not much larger than that. Place him, roll over. All right, they took it. They took it anyway. A little bit of sloppy on the fill, but that's okay. They took it immediately on the rollover anyway. All right, sitting short. See what they got. I will see what these bears got. Okay, ATR sitting 23. All right, Bears. Let's do it to them. Bulls, you've had just about enough fun, I'd say. Danny, what's up? How we doing? Now, this is Nasdaq Futures, NQ. If you're not trading futures by now, you're tripping. Chat says, why don't you buy the retracement instead of buying at the bottom of the candle? Ugh. Why didn't I think of that? Because my best trades are continuation trades that rarely get much retracement at all. If you've been around a while, you've seen plenty of them. You know, you enter with a stop limit sell or stop limit buy, usually in higher volatility environments, which we're certainly not in currently. But if I, tried to wait for a retracement every time, all I'm doing is giving up my best trades to take a higher reward to risk, lower probability trade. Which, if you want to do that, have at it. I'm not saying my way or the highway. What I am saying is I know it works for me. But do whatever you want. Okay, we got 15 seconds left here. That bar flew by, didn't it? On bar 55, we'll be rolling over into 56. A lot of hesitation on this bar already. ATR sitting at 21, maybe 22. That's about enough fun there, Bulls. Time for these bears to grow up, grow some claws, step on in, take us. What do you guys think? Maybe 350 points to the downside? That seems reasonable to me. Let's do it all here on Big Bar 56. Give me a whole bunch of slippage. Biggie! What's up? Says, feeling discouraged, had a great few weeks in a row, then I let emotions take me out the game. Anyone been there? I think every trader has been there at some point, at many points likely in their career. What I will tell you is volatility fell off a cliff these last couple of weeks, and I would imagine that, you were used to maybe a higher volatility trend environment and then the range environment. Maybe you were trying to trade it the same way, a little too aggressively, and then the emotions spiral, and then it leads to where you're at right now. It's happened to all of us. As time goes on, I think you get a little bit better at pivoting a little more quickly and seeing that the volatility is off a cliff and thinking about things a little bit differently. Quicker, Says, indeed, I was too aggressive. Yeah. Yeah, so what? So what? Get back on it. That's the thing with trading, is you're here for a reason, right? We have everything to gain. Chat says, I have a clear path to 100K a month. Just need to stop being emotional and treating it like the business that it is. Yeah. To some of you guys, that sounds crazy. That doesn't sound crazy to me at all. Just get back up, man. The path is there. Just gotta keep walking. Man, come on now, Bears, let's go. We're 8.5 minutes into this trade, and we're a couple points in the money, if that. Hey man, by the way, if you haven't yet, all you guys, I appreciate you hitting like here on YouTube. You know that I need some hit of dopamine if the market's not gonna move too quick. Hey, or dislike, big dog, whatever you gotta do. Hit a button, I appreciate you doing so. Alright, ATR, by the way, is 23. 1R on this trade is about 30 points. Yeah, that's the total across a bunch of accounts. 2 to 5 micros per account is how I do it. You want to scale your prop trading business horizontally. Don't try to scale it vertically. Do we know what that means, by the way? Can you guys confirm if you know what that means? Alright, so we got bar 56. I gotta watch the low of 56. And watch for about 20-25 seconds here. See if it takes out the low of 56. It did just barely, which means I gotta move my stop. Alright, keep it moving. Now, ATR is 22. My initial risk was 30 points. I've now moved my stop after the close of bar 56 and the open of bar 57. Okay? Just based on a trade, bar by bar trade management rule within RAMs. So, now we have options. And option A is to sit and let it do its thing and see if these bears can grow up a tad. Oh yeah, you guys get it. That's right. So, for those of you who don't necessarily know what horizontal scaling versus vertical scaling means, by the way, which is okay, but this is not a term used just in our industry. I have just applied it to our industry. This is used across many industries, but vertical scaling as it applies to prop firm trading would mean that you trade maybe one funded account and you just trade bigger and bigger and bigger size in that one account. Obviously, that comes with a whole bunch of issues. Now, in prop trading, if you have a positive ROI, then for every funded account you obtain, the average all-in cost, which includes if you blew some evals to get it, whatever, the activation fee, whatever. And then you look at the average amount of payouts you take from each funded account that you get. Again, the key word here being average. It's going to vary. If that's positive ROI, then that means that, okay, well, since vertical scaling doesn't work very well in prop because you have drawdown issues and you know, you can't really handle losing streaks the way you need to be able to. You lose 2 trades scaling vertically, the account's blown, which sucks and doesn't work. Okay, let's instead of scaling it vertically, let's scale it horizontally, which means you trade the same size per account. Let's say a 50K funded, it's 2 to 5 micros. And you're like, okay, it's time to make more money. It's time to scale this thing. How do I do it without increasing my size? You keep the size the same and you just increase the number of accounts that you're trading. That's scaling it horizontally. So you go from one account with, let's say, 4 micros to 2 accounts with, let's say, 4 micros each. Now you're trading 8 in total. Now when it's time to take a payout, instead of taking 1 payout, you take 2 payouts. And then you scale it to 20. And then more, and more prop firms, right? And all of a sudden you've effectively scaled it horizontally without increasing your size per account. All right, Bears, come on now. Let's see what they got. ATR sitting 23. Oh, you bulls. If you're just joining us here, I shorted the close of 54 with my initial risk above bar 54. On the close of 56, I got to move my stop above the wick high of 56. We've gotten close to take profit on this trade, but not quite there. Now, bulls testing the wick high of 56. Let's see what they got. Or was I in terms of in the money? At best, 18 points. Yeah, it wasn't quite enough. All right, let's see if these bears can step in. Give me one more run to the downside here. See what they got. All right, there's 57. You got to roll it over into 58. That's too bad, man. Takes us in the money, reverses, takes out our moved smaller stop. All right, keep it moving. We got bar 58, ATR low, 23. I imagine now you got bar 54. I wonder if we'll see this, actually maybe this or this, whatever, become a sideways range. Keep an eye on it. Man, who's excited to get volatility back? Should we take bets? How long until you guys think we've got an ATR midday, let's say, above 50 again? The market always goes through cycles, and this last cycle from high volatility to lower volatility, it was actually, this was just within the last 2 weeks. It turned, this time, it was a little odd. It turned on a dime. It normally doesn't shift that fast. But we saw volatility go from like, we just recently had ATRs of 60, 70, 80 plus. And all of a sudden it was like mid-morning. More recently, it's like already in like the 30s, if not 20s for a day or two. Usually it's a little more slow to collapse like that, but we've definitely seen a volatility shift, which I think is really interesting. Just because from a macro perspective, there's not a whole lot of basic explanation as to why volatility collapsed as quickly as it did, but it did. And a lot of times it's kind of a self-fulfilling prophecy. You know, when volatility really collapses all of a sudden in trading ranges, for example, the bulls have more confidence on the downside tests and the bears have less confidence of a breakout, and it feeds on itself and keeps volatility low, oftentimes until you get some form of catalyst that starts to break it out and loosen things up again. It always comes. It always comes. Oh, you guys! End of September? You guys think we have another 5 weeks of this, huh? I don't buy it. I don't buy it. It's only been 2 weeks. I'll say, if we're taking bets, I'll say volatility increases by early September. End of September, you're nuts. You're out of your mind. All right, we got 58 closing up. Into the open of 59. All right, guys, I'm out of here for today, man. I will see you guys back here tomorrow. Big Wednesday, middle of the week. Let's see what we get as far as volatility here tomorrow. If it holds up, you know, we had a little bit of volatility increase today, a little deeper into the day, okay, which is a good sign. I'm not saying it's going to shift on a dime. It was already a little bit odd that volatility collapsed on a dime, so maybe we ease back into higher volatility, but either way, when it comes, you better believe it, we're going to be ready. All right, guys. Hey, I'll see you tomorrow.